For more on China, we're joined by Jonathan Fenby of Trusted Sources. Jonathan, good morning. I gather you're just back from China.
Yes.
You've been in Beijing and up and down the East Coast.
Yeah.
Are you surprised by just how fast this recovery, in fact, this pace of growth is moving?
Not really. I mean, there is an arithmetical element in this because the first quarter of last year was the low point of the dip. So we're comparing, apples and oranges to some extent here. But it's clear that towards the end of last year, the stimulus package really was kicking in a big way, both through the fiscal spending on infrastructure, but more through the monetary spending. Huge opening of bank credit, 10 trillion yuan almost last year. In new lending. And really the story now, and from these figures which we just had, is whether the government and the central financial authorities are going to be able to slow down that pace of bank lending. They're trying to bring in a 25% cut in bank lending this year. There's some success, but the trouble with this is that it has to be done largely at local level to get the provincial governments into line, to stop them borrowing and spending perhaps on bridges to nowhere. And that inevitably takes time. So I think we'll get a slowing down, but the great irony is that while the rest of the world is hankering for growth, the Chinese leadership's concern is to bring growth down. There's something of an irony in this.
Of course there is. I mean, we've seen this, we've seen a huge expansion of infrastructure. They clearly want to keep that going. You've been writing about railways and the immense amount of work that's being done there. That needs to continue, but they somehow need to be able to just cool this without allowing a bubble to create and burst. That's right.
Yes, I mean at the local level, which I talked about, by which we mean provincial spending, really Beijing wants to get a handle on how money is being spent and where it is being spent. You make it sound like Beijing doesn't have it. We all think that Beijing has a complete handle on what goes on in the provinces. You're making it sound like they don't. No, there's still a lot of provincial autonomy in China, or semi-autonomy in China. And what happens, this has happened again and again over the last 30 years in China, is that when the economy runs into some problems, the provinces are given their head. They're allowed to spend to get growth up. And then you get the long process of Beijing trying to put, as it were, the tiger back in the cage. And at one point in the 1990s, Beijing in fact had so little control over local bank lending that they set up a secret central banking control outfit which nobody was told about in order to do it. So there are lots of games being played here, and that's what's going to play itself out over the coming months.
Do you think they're going to be able to succeed in doing this? I mean, the concern is, and everyone's talking about it as soon as we saw these growth figures, the asset bubble. What's your take on that?
Well, certainly you saw the markets, you saw the Shanghai exchange. I mean, the disconnect between the market and these wonderful figures is enormous. The market goes down immediately because the expectation is that controls will be tightened. There's the bank credit, I think, will be tightened, but it'll take time during this year. The big question, the big bubble, is property at the moment. And there's no doubt, particularly in the big cities, there is a property bubble. And this is partly a question of time because a lot of housing starts were undertaken in the second half of last year. And there'll be a lot of property coming on the market. Supply will increase. And can the demand be dampened down by that increase in supply? Or will we have to have administrative measures discouraging people from buying?
Now, the other thing, of course, that these figures have thrown up is a lot more chat about what's going to happen to the yuan. Is that something that you consider seeing being revalued rather, in the next couple of weeks?
No, I've always been among those who say China is going to move very slowly on the yuan. I know others have expected appreciation more quickly. You're going to get appreciation this year, probably 3%, probably in the second half of this year. That will be managed. China is worried that if it starts to appreciate slowly, it will bring in hot money. There's already far too much liquidity in China, which it's aiming to get out of the system. It doesn't want a lot of hot money coming in. It doesn't want the carry trade to start up again if interest rates remain as they are. So I think they're going to move very slowly. And in all this, over everything, Iran, nuclear, climate change, currency, China always puts its own interests first.
Indeed. And what about the politics of this? For every time that someone in Congress asks for it to be labelled currency manipulator, that puts it back, does it?
That puts it back, because Hu Jintao and Wen Jiabao, the Prime Minister, the last thing they want to do is to be seen to be kowtowing to Obama and the Americans and the West. So that puts it off. Also, as they made very clear, their concern is jobs, is continued growth, and because they haven't managed to rebalance the economy sufficiently towards consumption, they're still too dependent on exports, and therefore they want to keep the currency low to keep the exports flowing.
China's still inward looking.
It's still inward looking, but it's having to deal with the rest of the world, and that's a difficult thing.
Indeed. Thank you very much indeed for coming in this morning to talk to us.